Hello guys, welcome back to a brand new episode, and today is a very crucial one on the channel because in the last episode I talked about trading Forex or Forex. Is it worth it? And I basically explained how you can make money with this method. But the first thing I needed to state was, one, it's not guaranteed, and two, a lot of people like to sell a lie on this system of trading. And for that reason, I decided to adopt a no BS approach when talking about this thing, because Forex is a lot of things that is confused. Basically, the entire system is confused on how you do it, and basically a lot of people get misled. And honestly, I want to shine some light on what it means and what happens with this and what it is and how you can actually make money for it. But also, is it for you? Because a lot of people say, oh, Forex is the one, and then a lot of their followers or whatever jump into Forex trades, and then they just see actually for them it's not the one, and all they've done is lost all their money. But that doesn't necessarily mean that you can't be a successful stock trader, because trading currencies is quite hard. But trading other things might be your speciality, so it's important to know what you're trading and looking at all the important things around it when you are jumping into your investments. But yeah, tonight I'm talking about especially why Forex is hard and whether it is worth it for you. So it is true, you can make a lot of money from it. You can make money from it. It's not a scam, but in certain aspects it is. So directly, Forex is not a scam. Obviously, trading currencies, it's basically like walking into a bank in England and getting out £100 and going over to America and getting over, like, let's say $150, for example. And if that's the exchange rate, then you come back to England and the price of the dollar has gone higher, so your money is now worth £110, and there you go, you've technically made a profit from trading Forex. That's not the best example for it, but it is an example that I'm going to use. So obviously we can see it's not a scam because it's just something that everybody technically does when they go on holiday, etc, etc. So to make money off it is not impossible at all, but it is a lot harder than people think. So like I said, Forex is marketed as the one, but if you're looking at my trading account here, you can see all these different options along the top. We've got indexes, we've got cryptocurrencies, we've got stocks, we've got top winners, which are technically not relevant, we've got cannabis stocks, we've got ETFs, we've got things like this. We've got so many things that we can actually trade, and people are told that the Forex one is the one, and to certain extents that can be true. There are some really good aspects about Forex markets that aren't true about others. Obviously, I'm going to be explaining how Forex works in the entire series, but other things to note. So, the reason why Forex can make you a lot of money is because you're trading using something called leverage. So leverage basically means that your results are multiplied by a higher percentage of what they actually should be. Now, the number that this leverage is times by, I'm not sure of, because it is very variable depending on what trader, what brokerage, what currency, etc. So I can't really tell you a direct number, but it is very high in Forex, higher mostly than other things on the market. So for this reason, yes, you can make a lot of money. But when people see this and they see the high leverage and you're going to get 2% a day or whatever, it seems so easy, but you've got to remember, if that small move is all it takes to make you a huge profit, that small move is all it takes to make you a huge loss. And for that reason, this can be a very dangerous market. So perhaps for a more experienced trader who knows what they're looking into and what affects the Forex prices, this could be useful and it could be done, it could be viable. But if you don't know what affects the prices and you're seeing huge moves in one day, it's great for you. Just remember, the next day, a same size move can obviously catch you out in the opposite direction because you weren't really ready for it. So yeah, high moves and high volatility in Forex, good and bad. Obviously, volatility and leverage as well are two things that we know about that can be good and can be bad if we know how to work with them. They're good if we know how to work with them, they're bad if we don't. So there we go, that's the basics on that one. So moving on, Forex pairs, what affects them? So we've got major Forex pairs. These generally include the USD, so things like US dollar versus Great British Pound, US dollar versus things like the Euro, things like that. Basically, in these instances, the US dollar is actually affected by a lot of things. So a lot of Forex traders tell you, or a lot of Forex influencers, if you will, tell you that the way that you read Forex is through charts, as you can see. But another thing that is true about this, it can be true in certain times, in certain flat times, but you need to know about the sessions, which is not really something often talked about. You need to know about the sessions, and you definitely need to know about the news. So yes, analytical, which is a method of reading the charts, is fundamental, ironically, to reading this, but fundamentally, you do need your fundamentals to know about the Forex. So for example, If there's a news release coming out in 10 minutes on this market, which is the euro versus the US dollar, and this is a terrible news release, and then the US dollar drops significantly, obviously the euro will go up against the US dollar, and you could have been betting that the US dollar would have been up against the euro. So, it doesn't really matter how much chart reading you do, if you're not looking at the news and you don't know what news is coming out surrounding this, you will basically not have the full picture. So yes, analytical is great in times where there's no news. For example, if you're trading when the American markets generally are shut, so later at night, like at times like the Asian session, that tends to be low volatility. Then, yes, it may be a good idea to trade using analytics, but if you're trading during times when the US market is open, from the US time of around 7, let's say, to around 6:30, or even later, sometimes even 7:30, maybe it's best to definitely check the analytics, because yes, you can read the charts as much as you want, but if some major news comes out, the effect that will have on the market cannot be read directly through a chart, because you can be looking at the chart whilst the news is coming out and wondering why your investment is dropping so significantly without even knowing why. So that is a very important mistake that people make quite a lot. So another thing to talk about on the Forex market is to basically know which pairs you are trading. So this is quite a rookie mistake, a beginner mistake, but you need to know that the pair that comes first in the list is the one which you are betting to go up or down. So shorting the euro on the first pair, shorting the euro means that you are going low, anticipating the euro going down, and buying the euro means that you're anticipating the price of the euro going up against the US dollar. So it's a basic thing to remember, but it is something people do forget. So yeah, Forex, basically, another thing to remember, I'm just going over all of the basic things that you should know before you jump into this market. So another key thing to remember that is quite crucial, I would say, in my opinion, is that people just look for a quick solution. And what this means is you're going with too high of an expectation and a position size, and you could honestly build up a nice little portfolio from trading. I'm not even going to lie and say that most Forex traders are telling you a lie. I mean, it is technically true that they are lying to an extent, because you can't do it overnight, but it is true that using investments and Forex and day trading on whatever way you want to invest, let's say, you can make money. So, a lot of people do say that you can do it overnight, but in reality, this isn't true. So, if you're starting out with $100, let's say, and someone's telling you that by tomorrow you can have 200, and then you can multiply it to 400 the next day, honestly, that is just way too good to be true. And I don't care how they justify it, that is bad and it's not true. And what this leads to is it leads to beginner investors seeing this and thinking, oh, well, my results aren't good enough because I'm making $10 off my 100, or I'm making $20 off my 100. And in reality, that is quite a large percent. 10% of 100 is 10. So if you're making 10% a day, let's just say proper investors or fundamental investors generally don't make 20% a year. 20% a year in investing is considered good, whereas in day trading, people say, oh, 20% a day. Where in reality, honestly, if you're looking for 20% a day, you should not do that. What you should really be looking for is smaller percentages and count your small wins, because bear in mind, if you win £2, for example, that's a lot better than losing your whole account by going with a too big position size and blowing up the whole thing. So position size, very important for beginners, and it is important to also trade on a demo account when you're learning out, because trading on a demo account, well, yes, it is bad because it doesn't give you the real feel of the threat of losing your money, but it does give you some understanding of the direction of the market and how things work. So to understand the market is key, so make sure before you even jump into any investments, know the risks involved. Don't go in with too much money because you need to start out. I mean, what's the point in just going all in, losing all your savings or whatever, when you could just go in with a small percentage to start off with and then see how that one plays out for you. So yeah, this was just a quick video covering a few of the basic mistakes Forex traders make when they are jumping in for the first time. I mean, I'm sure that everybody who trades this market has made this mistake because it is quite overly marketed and overly hyped. You know, people talk about this market as being the golden market, marketed on Instagram with Teslas and Lamborghinis and things that people want. Whereas, yes, investing, it takes skill actually. And I'm not saying it's a skill that people can't acquire, but it is a skill that you do require. So over time it can be built, but if you're not doing your research and you're just looking at charts and not understanding what it means and what the basics mean, you aren't going to do it. So basically this was not meant to blow your mind or limit your expectations, because yes, you can still do it. And even if you can't do Forex, you can always move over to the invest side, look on the real side, look on your invest, and also you can even still do things on the CFD side. So we can move on to things like stocks and indexes and cryptocurrencies. So like I said, many things to invest in, but Forex can still be the one for you. Just make sure you know the risks when you're getting into it, because it is one of those markets where it's a good one while it's good, and it's bad when it goes bad. So it is important to know what you're doing. Anyway, it's been a quick one. I hope you enjoyed, and I'll see you in the next one tomorrow, where I will be covering my other investment side. And I think that you will enjoy it because it has been a well-requested video. Anyway, please click on any of the ones on screen right now, and I will see you in that one tomorrow. Thank you very much for joining me, and thank you very much for the view. See you then.